So today mindset is centered around forex trading and gambling. Forex traders, gamblers. What is the difference between a forex trader and a gambler? You see, a forex trader and a gambler are like brothers and sisters. They have one father but different mother. So they have blood relationship. The relationship they have is fatherly relationship which tie the two of them together, but they have different mother. A forex trader and a gambler share one thing in common: high expectation. They share high expectation, unrealistic expectation. That is one thing they share in common. The other one wants to use $100,000 account to become a multi-millionaire. He wants to drive a Rolls Royce. He wants to drive a Lamborghini. He wants to drive a Koenigsegg. He wants to drive a G-Wagon with $100,000 account or with a $50,000 account. He goes into leverage. He starts doing 10x, 20x, 30x, 40x. And in the process, the broker understands. The broker takes all that money away from him because he comes with unrealistic expectation. While a gambler, still the same thing. He's betting that Club A is going to beat Club B on a 1-0, on a 2-0, and he sells his shop, he sells his cars, he sells his ancestral land. He goes into his mother's account to withdraw it, or maybe money for his tuition, or maybe money for his rent, or even sell his car and places it that a Club A will beat Club B. His expectations are very high. He has very unrealistic expectation. He wants to, maybe when he cashes out, he buys a much bigger house, he buys a private jet from the seller of his properties. In the process, the betting companies take away the money because they understand that everything is probability. So one thing you must understand as a forex trader is that forex trading is probability. I don't know, this truth has been shaded away from a lot of people. Forex trading is probability. And you see, there are a whole lot of things surrounding it. You have to be very, very realistic. Otherwise, your character will become the character of a gambler. So while you are trading, you must base your trading on fundamental analysis and on technical analysis. This is one thing a gambler cannot get. A gambler cannot base gambling on a strong fundamental. He cannot theoretically tell you what he's doing, but a trader can tell you based on fundamental data. Just like, let's look, for example, the last ADP data from the United States failed, and we have seen 7-3 against the forecast. We have seen how the market turned around on that small fundamental data print. If the data had come in better than expected, we would have seen the reaction from the side of the dollar index, from the side of the 10-year treasury bond yield, from the side of the S&P 500. So this is what makes a forex trader different from a gambler, but their character is almost the same. They have almost the same character. Unrealistic expectation. Lower it. Lower your expectation. Every strategy is good. Every strategy is struggling. It depends on your mindset which you are using to accompany that strategy. Are you trading Fibonacci? You need a strategy. You need a mindset to join with that Fibonacci. Are you doing smart money? You need a mindset to join it. Are you doing trend? Whatever strategy you are using, you need a strong mindset so that at the end of the day, you will make a difference between yourself and a gambler, because at the end of the day, you all have one father. You all have one father, and the difference is just the mother, different mothers. One has mother A, the other one is mother B, but their father is one. They are tied to one father. This is a pure truth, and I don't want anybody to lie to you about this thing. You know, that is why you see a forex trader can make gains, grow $1,000 account up to $5,000, and he wakes up one day, he blows all of them off. Yes, the reason is because of unrealistic expectation, and he fails to understand the thin line between him and a gambler. Every trader must know this, that there is a thin line between you and a gambler, a very thin line. So you must keep yourself in check. You need an accountability partner, somebody who will always be there to make sure that you don't cross that line. There is a critical line that you don't cross it. If somebody is not there, you can easily drift and join the gambling side. And in the process, that is why they say only 10% of traders are profitable. Those 10% are early traders who have spent more than 10 years, 15 years, 20 years in the financial market. Most of them are hedge fund traders. Most of them are treasury traders from the bank. They are well experienced. Their mindset is well trained, and they are disciplined. So I want to let you know today that while you call yourself a trader, do not forget there is a thin line between you and a gambler. And it is very easy to drift from a genuine trader to a gambler. Bye bye.